Hello everyone, Paul here from the Pin Academy. So in today's video, we're going to be learning how you can put together price action and Confluence. But before we even get started, I would like to ask you a question. Have you ever been in a situation whereby you make a correct analysis, which later plays out, of course, but at the beginning when you're marking out your levels or zones, you feel like it's not correct. You need to ask someone. Now, this is happening to you due to lack of confidence. Now, what makes you to lack confidence is because you do not have what we call confluence in your analysis. Now, in whatever you do in trading, whether in a structure time frame or entry time frame, make sure you have what we call confluence. Now, what is confluence? Confluence is when we put more than one thing together to give you almost the same idea. That's what we call confluence. Now, in trading, it's when you put more than one strategy, what you guys call strategy. Personally, I call it a method together, so it can give you almost a similar area or a particular area whereby you can make a decision from. It can be an entry time frame, it can be in a structure time frame. So if you combine your marking of levels, no matter the strategy you're using, whether you're using smart money, whether you're using there are many strategies out there, whether you're using market structure like what we do. As long as you use more than one thing, you can even combine it with the indicators. You will be able to get almost the same area. That's what we call confluence. Now, in trading, no one is 100% sure. That's why they say that no strategy or method of trading is 100%. Now, but for you to increase your chances of at least being somewhat very confident, because we're looking for confidence. Trading is all about confidence, right? If you don't have confidence, even if you make correct analysis, you will not be able to take those trades. Now, how do you lose confidence? You lose confidence, one, when you've been trading and you're having a long losing streak. That is one. Two, when you're just still learning a concept. When you're just learning a concept, most times you're not going to be having confidence to take trades or to execute trades. Now, we have been looking through comments, and most of you are saying that we are learning, but we are not having the confidence to execute trades. So this is how you're going to solve it. Have the price action. What we've been doing is what we call price action, marking turning points and the rest. What now? Today we are going to add in confluence. Just in the previous video, which I'm just going to attach in the description or just somewhere on the right top corner, we looked at how we take entries. But still, even some people are still having issues with these entries. But what is causing that? It's all because of confidence. So now how to solve that is we're going to add in what we call confluence. You have to add in something that is going to give you almost the same idea, so at least you can have confidence. Like, okay, if these two things are giving me the same thing, that means at least there's some high rate of accuracy to it, right? So that's what I mean by confluence, right? So today we're going to be combining price action and confluence, both in structure time frame and entry time frame. Also, another reason why you are not able to take a quick decision or to execute quickly is because you're not backtesting whatever you're learning. You have to backtest and you try to do it over and over so that you can become sure of it, right? Of course, you're not going to win all of them, but if you backtest 10 times and out of 10 times, 7 times you're correct, and you do it over and over, it means you're going to gain confidence, right? So I'm going to use an example on V75 because it's what I've been sharing with you guys a lot. And I'm going to show you exactly from the breakdown that we did. Let's take an example. Let's say that you're using trend lines. You have your trend line from up here, your first touch point, second touch point. This is your first touch point, right? This is your second touch point, and this is the third touch point, whereby we're saying that we're interested in taking a trade. Now, you know that this is going to be your area of interest, whereby you can take your sell. Now, you can clearly see that some people even are going to say, this trend line is not correct. But for you know that what are the rules of drawing a trend line? Let's just remind ourselves the rules of drawing a trend line. One, you need to have more than two or more touch points, which qualifies here. Then we said also on the second touch point, we need the trend line to cut through as many weeks as possible, which it's being fulfilled here. Then we said that we take trades on the third touch point, but when the price touches the third touch point, we have to shift the lower time frame. And we need the third touch point. The price came and touched on the third touch point. Even if the price or your trade or your trend line is matching all those rules that we studied, some people tend not to follow. Why? Because they feel like they need more. Like it's not something accurate or something. Of course, you're not going to be very confident if you're not backtesting. But if you add in what we call a confluence can be another method or another strategy, what you guys call strategy. But personally, I take it like another aspect that you can put onto your chart. It can be an indicator, it can be another technical tool that can help you to give you the same idea. Now, for example, if I'm using this trend line here, you see I have a third touch point here, right? Now, I need to add in some other aspect that can give me that this area here is also a very sensitive area whereby I should be looking for. I should be taking it as my area of interest. Another second thing that you can use is this untested level. You can see the market created an M here, right? And never tested the neckline. So you'll mark this structure. So meaning here you have two things now. You can either say that I have a trend line, right? And I have this neckline that was not tested. You can see the market broke down, but never tested this M. And not by the rules of an M. When an M is created, we expect the market to come and retest, but the market had never come back to retest. So meaning this area here was a virgin area. So this is another confluence that you can use. This is a confluence. So here you're using a neckline, or what we call just a turning point, and a trend line to get a very strong structure area. Are you getting it? So when price comes into this area here, that's when you can shift to your entry time frame, let's say like H4, and say, okay, at least by the look of things, this was a very strong structure area, so I can be able to take my trade with confidence. Getting it? This is how price action works hand in hand with Confluence, and it's going to boost your confidence. That is for the bigger time frame. You're getting it? Now, let's take another example. Let me just clear this. Let's take another example. Let's assume that you're in a daily time frame, and also the market is trending upwards, higher high, higher low, higher high, higher low, higher high, and still you're using a trend line. So you draw your trend line properly. You make sure you follow the rules. You draw your trend line properly from down here. Second touch point has to cut through more than as many weeks as possible. You can see here where this is the first touch point, second touch point. So you need 2 or more touch points to draw a trend line. Lowest point or highest point, it has been fulfilled. Second point, we are cutting through as many weeks as possible. It has been fulfilled. So this was 1, 2, 3, right? Now, imagine you're looking for a sell here. And also that point upwards, the point that we marked here, you're not very confident with it, but you feel like you've practiced trend lines, the counter trend lines, they'll work for you perfectly. What do? This is one, you've marked your trend line. So secondly, we identified that we have a support. This was the last support, the resistance that the market broke, this one here. So the market is now going to use it as a support. Are you getting it? But you don't want to take a trade exactly from this point, from the first example that we did. So you're going to wait for the market maybe to break below this area here, right? So you're going to be like, if the market broke below this area here, on the retest, then I'll take my trade up to here. Now here you have two things. One, the market has broken this trend line here. And secondly, it has also broken this support, because here the market came and gave us a turning point, went up. So when it breaks below, on a retest of this area here, you know that the market has broken this trend line, and it has also broken this strong level of support. Remember, this is a support level in a daily time frame. So if it is broken, it becomes a resistance, meaning you'll be targeting this area here. Are we together? So this is what we mean by combining price action with another method, with a confluence, with another method or strategy, so that, of course, they can all both be for price action, but at least combine two things so that you can be confident. You know, sometimes as a trader, trading is a personal journey whereby you have to focus so much on yourself. You may know all these things, but if you don't understand yourself, it will be very difficult. Now, why are we teaching you guys this? Is you have to identify on top of the things you're learning from us, add on one thing that maybe we have not showed you here. Oh, we have showed you. So combine them together so that they can make much more sense to you. Are we together? For example, if you're trading impulsive moves, add on these levels. Let them give you confidence so that if they're in the same place, then they'll make much more sense. So let's use another example. Let's go back to the weekly time frame. Let me just clear this. Let's go back to the weekly time frame. I'll just clear this chart so it's clean. So let's come back to the weekly time frame. Let's assume that still you're using this trend line here. You can say that I'm a trend line person. I've drawn this trend line here. You can decide to say that, okay, let me try to input in an indicator, which is a moving average, EMA 200, because I've taught you guys that. And we said that when the price is below the 200, when price is moving below, this EMA 200 is acting as what? Is acting as your resistance. So you can clearly see this is the first touch point, this is the second touch point, and this is the third touch point. You're getting it? So on the third touch point, we expect to take our trade downwards, a sell. You're getting it? Because this is also a resistance. But also remember that we're having a confluence in the same area of this moving average here, this moving average, this one. So meaning this area here is having our resistance. So in simple terms, we're going to wait for price to come below the moving average, and then we shall take our trade. So if you're to see that this is the moving average, you can just mark it. For, let's say, for example, you say that if price has gone above, I want it to come back below this moving average. Then when you go down to the daily time frame, you can clearly see that it's still the same area that we had marked using price action. That price retested, then we wanted it to come back down to this level here. That's how you use Confluence. Make sure if you feel that you're not yet very confident or you've not yet mastered your rules, use more than one method. It is going to give you a confidence, and you'll avoid saying that I missed out a trade because I wasn't so sure, I didn't know what to do and all that. Because if you use more than one method and they're all giving you the same point, it means that there's a little bit of sense to that point, that there's something in that area there that you should react to. So here we have been using bigger time frames, right? I've showed you in weekly. Here you're using moving average and also this trend line here. And also if you want, you can still add it to the same area, this neckline. You can see it's all the same area. It means that from this area here, at least there are higher chances that the market is going to give us the retracement that we're looking for in the monthly time frame. You're getting it? I hope that makes sense. So if you have any questions, kindly put it in the comment section, and we shall be able to respond. We normally look through all comments, right? So I've given you some examples in the structure time frame whereby you get the structure from. Now let's look at entry. I just taught you guys entry of recent. Now remember, this drop here, we talked about how you would have taken this entry from up here, in this drop. What did the market do? The market gave us this turning point and gave a fake out, right? Here. But now, some people will say that I fear taking trades early, and sometimes I enter a trade and it goes against me. So we say that this is why you should take your trade. Are you getting it? But some people will be like, I'm not a high risk trader. I don't take trades very, very highly. I don't want to take trades maybe before it completely changes trend. So I'm going to take my trade below somewhere. But also when the market breaks below another structure, below this support, this is a support, so it breaks on a retest, to take a trade, you fear again. You also wait again for the price to maybe come and break below this area here. And you're like, okay, I'll take below here. Also below here, you fear. Now, if you're under that category of people, you have your rules of entry, but you're not executing, add also what we call Confluence. Add another thing that you can. Now, for example, here, you can decide to have a trend line still, right? You can have this trend line and you say that, okay, if I'm waiting for the market to break below here, let it at least first break this trend line. I know I have this touch, and the market a bit reacted to this level here. So if it is broken, if this level here and the trend line are broken, then I'll be able to take my sell. That's one Confluence that you can use. Are you getting it? Then also, another aspect that you can add on besides this is the moving average. You can also add the moving average here. Let's go and add our EMA 200, which is going to act as our support and resistance. Still the same area. You're seeing the market, if you say that you don't want to take the trade from here and you want to take it below here, so you can say that, okay, where's the moving average? The moving average is in the same area. So you say, okay, I won't take from here, but I'm going to take when the price closes below here. It means that it has broken all structures, so I'll be able to take my trade freely. So when the price breaks the moving average below, and what did we say when price is below the moving average? We say that it is into a downtrend. So that's what exactly you should be looking out for. Do not fear. Make sure you back test whatever we are showing you. At least we are very sure about it, right? And if you've been following us on this channel for some time, you know we're not here just to jump from one topic to another, just to look for views. No, we trade the same thing. That's why you see our breakdowns are almost using the same method, because this is what we have done for very many years, right? I'm not going to jump from one thing to another because I don't understand. I may know it, but I don't understand it so much that I can teach you to the extent that you can be consistent. So in case you had that fear in you, or you're not sure about your entry rules or your structure rules, where you've marked your structures, whatever method you're using, add in a second, because everything in trading works. It's just how you use it and you follow its rules. You're getting it. That people who are using indicators and it's working for them. The people are doing price action. The people are using SMC. The people are using, is it ICT? The people are using YCOF. The people are using, there are very many things outside. There are volumes and the rest, right? And it's working for them. You just need to understand the rules. That is one thing. Understanding the rules is one thing. But the second thing whereby you need really guidance on is, and you need to really put effort on, is understanding yourself, right? You may know all these things, but the moment you don't understand yourself, how do you react, right? After a good time, after a bad time, when your rules appear, how do you react? After losing, how do you react? After winning, how do you react? Do you follow the rules? Etc, etc. But it all comes back to yourself. You understand yourself. The moment you don't understand yourself, it's going to take you a longer period of time. Most of you know all these things that I'm showing you. You know all these things, but because you don't understand yourself, it's still taking you time, right? So that is it for today. I hope it made sense. Have a great time.